It's recording. All right, we can get right into it. Um, yeah, this is just about finding high probable days. I just wanted to make it clear before we start. This is not the only thing that I look for to take a trade. This is just one very clean, easy thing to look for that is repeatable, but it does not happen every day. Just putting that out there before we start. Um, so what do you look for? So you need the daily chart to be in an expansion phase. And so these are all daily candles that you guys are seeing in your chart or your screen. You guys can see that we're not stuck in a range and we have expansion candles and there's a one-sided direction or one-sided delivery in both sides. So that is the first step. And you can see you have a bullish and a bearish example. The second step that you're looking for, you do not want a large opposing run. So if you're looking for bullish price action, you do not want a large down move before expecting another leg higher because that doesn't support expansion. So this supports the daily profile since you don't want a large lower or upper wick. And you guys will see what I mean by that in a second. But if you have a large upper or lower wick, that does not support expansion. And we can even go back real quick. You guys see this candle right here? We had a large opposing run. See the candle open lows first, and then you can see very small candle body. This is yes, you can still frame a trade inside of this, but this is not an ideal condition. This is the candle you want to be trading. You can see a small lower wick with a large candle body. And again, of course, can price still expand? Yes, but normally you have to adjust your targets. So this is what you do not want to be looking for or seeing when you're expecting a buy day, right? So you see the large opposing run right here. So we have our midnight. This is your new day open, right? See the large down move here that happened overnight into the New York morning session. We did reverse around 10 a.m., hitting that sell side liquidity pool. We reversed, yes, but guess what? It took literally all day to get to previous day high. So this is what I mean by yes, you can trade this. Yes, this is a very nice 10 a.m. reversal, but you have to adjust your targets. If you were holding for these highs, you can see it would have, unless you would have held all day, which some people do, but you can see the difference there. So see the large opposing run? That is not ideal. 10 a.m. reversed, and you can frame a trade inside of that price leg, but do you see how long it took price to hit previous daily high? It didn't get taken until 3 p.m. That's what I meant by having to adjust your targets. So this is what you do want to see when you're expecting a bullish candle. So the sell side liquidity was ran here during the London session. So your London session will be from 2 a.m. to 5 a.m. So the London SMR stands for Smart Money Reversal, is the potential low of the day. So you can see how price is manipulating this sell side liquidity pool, which is marked as the failure swing. Price is manipulating the low, and then we create a change in the state of delivery above these last two down close candles. A change in the state of delivery is just this up close candle that closes above this last down close candle's opening price. So that is why I have that marked out, and you can see CSD. So we're expecting a bullish day, and London forms the low. The CSD confirms our narrative. We have our drawn liquidity above. We have our previous day high. London reversal. The low is put in at 4 a.m. and that means you can trade the newer continuation. And you can see, guys, that there was a very shallow run below the midnight opening price here into our key level, which is that failure swing. And this is what I mean earlier by a small lower wick. You can see right here. That supports a large candle body, which is expansion. So this is what you don't want to see for a bearish example. The day opens high first, which is normally what you want to see when you're trading a bearish candle. But you guys can see that the reversal signature never occurs until all the way pretty much when the day was almost already over. So you can see this would be, if I would draw a line from this opening price out, this candle does close below this opening price, but not after until a large opposing run. And you can see this would normally be our drawn liquidity, but that was never met. Just the short-term sell-side liquidity pool here. And once again, if you are going to trade this sort of day, you have to have lower expectations. And so this move right here, up, this was 9 a.m., 10 a.m., 11, 12, 1, right? So something along those lines. All I remember for a fact that this was the opening bell candle, and normally you want 9:30 to be heading towards your drawn liquidity. And in this case, we had that large opposing run supporting a not so clean day. So this is what you do want to be seeing. You want to have a key level being met. So in this case, it's just a buy side liquidity pool. This is the hourly chart, by the way. You have a London smart money reversal, or SMR, which is the potential high of day. And you can see here's that liquidity pool up here. Midnight opening price, very shallow run above midnight. You have a 1 hour change in the state of delivery, annotated right here by this orange line. A 1 hour bearish fair value gap here created. Why are fair value gaps important? They indicate speed and displacement. A lot of people use them in the wrong ways. That's what you want to be focusing on, is when you're trading away from a key level, which is this high, is there displacement? And how do you know if there's displacement? Fair value gaps are left behind. That indicates speed. Relative equal lows below as the drawn liquidity. This was a daily sell side liquidity pool down here. So once again, 2 a.m. forms the high of the day. Change in the state of delivery, 1 hour fair value gap. Another order block is made here. And you can see this here was that 9:30 opening bell once again. And you can see since the reversal was already put in, the next key time, which would be your 9:30 opening bell, the stock market open, price is going to or should continue what the reversal had already done. So that's what London reversal, New York continuation means. And this is just beautiful. And again, the daily chart is in an expansion phase, so you can expect these nice, clean, sharp open moves. This is what unfavorable conditions look like. I can't remember if this was the 4 hour or the daily chart, but regardless, you guys can go back in your own charts and look for yourselves. But when price is chopping around in a range with no clear direction, that is when you want to avoid trading. And again, that doesn't mean you just have to never trade. And this is just for indices, by the way. I wanted to put that out there, just futures. But I mean, actually, it really shouldn't be, but you can find more opportunity in individual names. But this, you guys can see how price is just literally inside of this range. We're stuck inside of this high, and we're stuck inside of this low. What you want to be doing is waiting for one side of the range to be taken, and then wait to see what happens from there. And you can easily identify these conditions on the 4 hour chart and above. So that's what I always try to tell people, is if you guys are feeling stuck or lost, or it just seems like you continue to get slammed over and over, you're most likely on a too low of a time frame and you're not seeing the big picture. And you guys can see the difference between this here. This is not what an expansion phase of the daily or 4 hour chart looks like. This is, right? You guys can see the clear difference. So tying it all together with SMT, SMT stands for Smart Money Tool or Smart Money Technique. SMT is how you confirm if the reversal is being put in. That is where you will look to trade away from. So we should always be trading away from manipulation, manipulating a high or a low. If you pair that with SMT, that is most likely how you can confirm that the reversal is going to occur and that you can find the low or the high of the day. So SMT is when correlated assets have a Kraken correlation. They should always be moving in tandem. So every single asset, NQ, YM, ES, every single one of them should be doing the same thing. And if they're not, that's either a sign to stay out of the market entirely, or this is where you can find your SMT, and that is how you're able to have protected highs and lows, and again find the higher low of the day potentially. So if an asset makes a lower low but the other fails to do so, that is bullish SMT. If an asset makes a higher high and the other fails to do so, that is bearish SMT. Of course, there are no certainties in trading, but this will give you a solid idea of where the low or high of the day can form. So this is the 4-hour chart or the 1-hour chart, NQ and YM. So you guys can see here, this is what SMT looks like. See how NASDAQ makes a low here, makes a new low from this candle, but YM fails to do so. That would be bullish SMT, and you now could be hunting for a trade setup inside of this price leg to at least take the high, and there's most likely a failure swing or a buy side liquidity pool above to the left somewhere. Same thing here. Now we have NQ and ES instead of YM. Same thing. ES fails to make a lower low while NASDAQ does, running out a pool of sell side liquidity, which is this low. You can see this purple line is indicating midnight price as well. We run that out, and then we take the range high or the buy side liquidity. It's the same thing. And in this case, you want to be trading, you always want to be trading the stronger asset. So you want to be trading ES here, and you can see the difference between the strength, right? NASDAQ doesn't reach this buy side liquidity above until the next candle, while ES already hit it. And one more example, same thing. Now we have ES and YM. You can see this sell side liquidity pool down here. YM runs that out. ES fails to do so. Bullish SMT, indicating ES is the stronger asset. And you can see that we end up taking the buy side liquidity above, and you want to be trading ES in this case. Bearish SMT examples, same thing, just flip it on its head. You guys can see this high right here. This was taken on NASDAQ, but not on YM. And then we are targeting the sell side liquidity pools below. Now we have NQ and YM again, same thing. This liquidity pool here was not taken on NQ, but was taken on YM. So you want to be trading NASDAQ in this case. And you can see we're targeting this range low here, or the sell side liquidity below. And the last example, same thing. This high was taken on both assets, right? But now you can see that new candle, and I remember this was the 4-hour chart. The YM takes this candle's high here, while NASDAQ fails to do so, and we're targeting this low here, and that was hit. And moral of the story, you don't want to trade when your chart looks like this. Doesn't matter the time frame. If your chart looks like this, what did we talk about earlier? Do you see a fair value gap? No displacement. Price has no urgency. You do not want to be caught up in this. And Bev says, trading is all about finding your edge in the market and only putting risk on when the market has favorable conditions. And that could not be more true. Quick rundown of the checklist that I look for and what we just went over. So ideal trading conditions. Daily chart needs to be in an expansion phase. So what does that look like? Right here. Large candle bodies, small lower wicks, not stuck in a range. Small upper wicks, large candle bodies, not stuck in a range. Asia or London manipulating a high or low paired with SMT ideally. Why do we want SMT ideally? Because that pretty much confirms that the lower high should be protected. If you have an SMT inside of one of these session highs and lows, and then a change in the state of delivery on a lower time frame, that is how you're able to find protected highs and lows. But SMT is not required. For me, personally, some people do. I do not require it. But you'll find that when there is SMT present, the days are either much cleaner or you have much less drawdown, etc. No large opposing run. Small upper or lower wicks support a large candle body. No large opposing runs. Here, large overnight move into the sell side. And yes, we reversed, but it took a very, very long time. So this is not ideal. What is ideal? Right here. New day open, midnight, small run into the failure swing, change in the state of delivery, small lower wick. This is the daily candle, by the way, being printed. We have our drawn liquidity above, and it was hit by 10 a.m. London reversal, 4 a.m. smart money reversal, New York continuation, small lower wick, supports a large candle body, which is expansion. This is where you will look to trade the New York continuation. Asia or London reversal, New York continuation. And we can go over this one last time. Same thing, key level, above, very shallow run below midnight or above midnight. 1 hour change in the state of delivery. A potential high of day is formed. Displacement, leaving fair value gaps. And then you have the second change in the state of delivery here, right at the opening bell. And you have the relative equal lows below. London reversal, New York continuation, into your sell side liquidity below. Bev, you got anything?
Dude, I just wanted to shut my mouth and let you talk, bro, because I'm serious, dude. Like, I learn a lot from you all the time, dude. You're a great teacher. And so I hope y'all very much, indulge and digested all that, dude. There's a lot to take in there. So, just to kind of, yeah, simplify, like, again, you just don't want to trade chop. And kind of like I mentioned on that slide is just, all we do in trading is put risk on, right? That's all we do. That's what a trade is, right? It's putting risk on. When you do just, I know we trade funded, so it's easier to disconnect from the money that we're risking, but treat it as if it's your money. It's like, okay, am I okay to lose 500 or risk $500 on this condition? Like of how these look right now, like no, most of the time it's no, and you see us take trades every day, and I do feel like that messes with a lot of people, but I want to go back to Rob's point earlier. You still can take trades on lower probability days, but just expect less. Not every day are your full targets going to get met. Intraday, like, whatever levels they are, just kind of highs and lows from maybe macros, whatever it is, they're very important to make sure you take scales there on lower probability days. And that's how you see us taking trades every day, is because we still can find little edges in there, but we're Swami proved us wrong this week, but getting 300-point trades, but it's like it's not always going to happen. It's not always going to happen, and I think a lot of us have the, if like going for something 30, 40 points plus on NQ every single trade, but taking a 10, 20 point trade on NQ is still massive. That's a huge win, and that's what we'll take all day on lower probability days. Um, but yeah, it's just the biggest thing is trying to keep your risk away from awful conditions. Like I had Asia chart pulled up, right? And I could see some people wanting to try to take something, right? And there's just nothing to look at here, right? We already swept yesterday's highs or Friday's highs, and there's nothing more to look at, So it's like right now is a perfect example of just don't touch it. There's no reason to touch it, like wait until there's a real reason to touch it and put risk on. Is kind of the biggest thing that at least I wanted to talk about through this class is, like I've talked to a few like very like high end traders, and some of them take one trade a month. Rob's a great example of this. Like sometimes he'll go a week without taking a trade because conditions are just shit. Like I force more than I should, just full transparency. But I still make sure I manage accordingly depending on what the profile looks like for the day, right? But, like I don't know. I guess that's kind of where I'm going with it is like make sure that take your best and highest probability trades always. Don't sacrifice. But that's pretty much all I had to say, dude. You freaking killed it. Let's give you a quick round of applause, everybody.
Appreciate that. I have two examples that I want to show you guys just because personally I wanted to kind of present this on how I like to learn. I'm very hands-on. I can't learn through a PowerPoint. I can't stand when there's like a video and the whole thing's like 50 power slides or whatever. So I'm going to show you guys two examples of what we just went over, and it's going to be in the lower time frame, so I kind of want to frame everything from the higher time frame all the way to the lower time frame. There'll be two bullish examples, two bearish examples, and then we'll do a little bit of questions at the end for whatever. And let me just read these real quick for whoever asked. Yeah, paper hands, bullish SMT, trade the stronger asset for the most part. Bearish SMT, trade the weaker asset. Yeah. Um, and I don't think there was anything. Oh, Rob, do you use session profiles like London Reversal and New York Continuations daily? So it's not always going to be there, right? And I'm not somebody who's hyper focused on the quote unquote ICT profiles like that he's put out. I just mainly focus on was there a large opposing run? Because if there was, then again, your expansion is most likely not going to be all there that day. And of course, it can change and it depends on how volatile we are. Because this one slide right here, I remember looking. This was like a 700 point move down and then like 900 up in like the same day. It was absolutely insane. But that was when everything was going crazy. So it just depends. But let me know if you guys can see my screen here in a second. You guys can see TradingView?
Yeah, yeah, it's live.
Alright, cool. So this will be the first example. So same kind of thing, right? We are looking at the daily time frame, right? Ask yourselves, is the daily chart in an expansion phase? I would say so myself. So, and what am I looking prior? I'm looking at this because this doesn't normally support expansion. See how we take the high and then immediately come back in the range? But I like this here closing above the last down close candle. And what did we do? We're using this down close candle as support and this fair value gap here. And then now we should be expecting some sort of continuation. So dropping from the daily, and what do we have? We have a reasonable target, right? Up here. And if you look to the left, we have some fair value gaps that we can reach inside of, and of course the highs of an all-time high. But you don't need all of that. All you need is this high, or maybe you don't even need that high, which we'll go over here. So normally I go from the daily to the 4-hour, and I saw that we kind of really didn't have too much here. But I remember saying in IRONHEART that if we did get this 4-hour CSD here, that I would be expecting a continuation off of this. And so short-term low gets ran out. This is your sell side liquidity sitting inside of this. So all of this matters, right? The left of the chart, you cannot forget about it. But now, since we have all of this framed, now we can look for a trade here going into the day. And it's also a Tuesday, right? A day that you can expect expansion normally. So not really much to look at in the 4-hour other than understanding that this is your down close candles that you could be expecting to trade off of. And then we can go to the hourly and the same sort of thing. So if we play price, we have a swing low or a low at this point that was ran out. And if we go back to the 4-hour, we can just draw out this upper wick because price is engaging with that 4-hour order block. So small sell side liquidity pool ran, inside of this order block. That's what this is. We'll just make this like that so you guys can see it easier. And then now, what am I looking for? Well, ideally we have SMT. What do we notice here? SMT between, this is NASDAQ above, this is YM. Now we have SMT. So that, to me, when I'm seeing this in real time, that's a light bulb going off in my head. Now I'm looking for a trade actively. And you can see what time was the low formed, 4 a.m. So during that London session. And then now we have what? The CSD confirmed with the 6 hour or the 6 a.m. 1 hour candle. And then now we're expecting our high to be taken. And then of course we have our external high even higher. And so we can play price and we can wait for 9 o'clock here. And I normally always go to the 30-minute after the hourly. I really like the 30-minute chart. And if you are up trading, this could literally be your entry model right here. There's SMT during a key time, which is London session. You could literally be entering here with your stop loss at the low. So now you have a 41-point stop loss for 136 points. And that's bare minimum, right? You could always hold some for up here. And you're expecting the New York bell to continue what already started during the London session. So this is your bare minimum target. Price is not going to reverse from this area here. It's not going to reverse from this area here. It's going to reach an important key level. So just an obvious external swing high, which is what this is on that 1 hour or whatever time frame you want to look at it at. So what does price do? Rebalance a 30-minute fair value gap. Barely. And I believe there was SMT here as well. Again. So now we have double SMT. Yeah, so later YM comes down. But we can go into the lower time frame here. I think I actually took this trade. Yeah, so this is all I'm looking for. Understanding that this is the 30-minute fair value gap. I did take this trade, I remember. I longed this 5-minute change in the state of delivery, had my stop loss down here, and then I took my 2R, something like this, and then like the open hit my 2R barely. But that's all I was looking for, because I understood that this was going to be the draw. This is the easiest draw on liquidity, the most obvious pull of liquidity to be taken. And we have SMT inside of the fair value gaps on the 30-minute. And then we have a series of down close candles that gets closed above. Now to me, since I've seen this enough, I've trusted this enough, I'm entering off here, stop loss at a reasonable level, and then you guys can see that I actually got taking profit here. But regardless of your entry model, the most important thing is that the London low was formed with the SMT off of what? This 4-hour order block, which is your key level. You can see shallow run below midnight, easy target to the buy side liquidity above. So that is the first example. Oh, that shouldn't be on, but it's alright. Oh, I think the good thing I wrote these down because I just deleted my drawing for it. But or no, we just did June 3rd, didn't we? May 13th. Alright, let me find that real quick. Alright, so there's our day we're looking for. Again, is your daily chart in an expansion phase? I would say so. 4 hour. Here we go. So what do we have? Same kind of thing, right? Price was sitting inside of this. And the one thing that I actually did leave out is when you are when a daily chart is in an expansion phase, you never want to see deep retracements. And that's the same kind of thing as like an opposing run. But you'll notice that when price is moving very clean, the upper portion of fair value gaps is being respected. The opening price or the high of the wick of an order block is being respected, and price does not spend a lot of time below these areas. And price normally does not come back to premium and discounts in quotation marks, because you can find a lot of different premium discounts, but that's not the point. So price is sitting inside of this down close candle, and we also have this below if we do want to use that, but I'm expecting this low to not be ran out before at least this high. But what do we see? So we can not really too much again, other than I'm expecting this down close candle to support price. We go to the hourly, and what do we have? A lot clearer on the hourly, right? Sitting inside of this 1 hour fair value gap here. And what did we do? We ran out a short-term low, which is just sell side liquidity. And what time does the low of the day form? Potentially, right? Potential low of day formed at midnight. So that would be from your Asia session. I use 20 to midnight as my Asia session. So, um, and in this case, this is where I like to drop to the 30-minute, because if we would have waited for an hourly CSD, you would have had to wait for all the way up here, or, which is a little more advanced, but I will bring it up. This would actually be technically your order block, just because there is SMT between these lows. So see how right here, this is the low at 3 a.m., but Nasdaq makes a new low at 4 a.m., and they both close above. That's how you know that this low should now be protected, especially since you have the narrative prior to the trade. So you could be entering off of any retest here with your stop loss at the low, targeting the high if you do trade the overnight sessions. But the potential reversal was put in. Also, the 30-minute is even cleaner in my opinion. So same thing goes on a 30-minute. You're just waiting for this. And so if you want to be just even a little less confused, you can just long this candle here, stop loss at the low, and again target up here. And again, same kind of thing. What do we have? London potential low of day, change of the state of delivery. What are we expecting? A New York continuation until where? Again, we're not going to be reversing from here. We're not going to be reversing from inside of these areas. We're not going to be reversing from this high just because it's too close to this high, right? This is not an important external key level. And you can see what price does, 8 a.m., 9 a.m., and then so forth, right? Continues to expand higher. So those were the two bullish examples. We can go over two bearish ones, and then we'll do questions. April 9th. All right. Let's see. Right there. So, ask yourself, of course, is the daily chart in an expansion phase? Yep. And we're looking left. What do we have as a reasonable target? Well, any of these lows if they weren't taken yet. I'm not sure if they were taken yet. But just find a logical level where you think price could be heading towards. So this would be your next if we do displace to this one, and then any of these fair value gaps, and of course this low as well. But what are we looking for? This, right? This is your daily chart in an expansion phase. Not really too much to look at here. Go to the 4 hour. What are we looking at? Play price going into the new day. So here's your technical Asia open, which is 18 or 6 p.m. So what do we have? We have previous day high, which is Wednesday's high, gets ran out on Nasdaq. Actually, I don't think it does get ran out. Does it? I can't even tell. No, it doesn't. See, doesn't get ran out. We look at YM. YM takes the high. So now you could be expecting potentially a high of day to be formed. What are we sitting inside of to the left? a fair value gap. This is sponsoring your move, right? This is also an order block. So now you have PD arrays sponsoring your move. You have SMT at the highs. And what's a logical area to target? Well, you could use, in this case, equilibrium of this range. Or you could be targeting this, and this would be a breaker, if any of you guys know what that is. But my focus would just be on the EQ of this range. So again, light bulb should be going off. We're sitting inside a bearish PD raise. We know the daily chart is in a bearish expansion phase, and now we have SMT at the highs. At what? A key time. And also a key liquidity pool was taken, which is previous day high. So you guys will always see reactions normally at those levels, and that is a majority of how Swami takes his trades. Here's the hourly. Not much to look at the hourly. And this is where I like to use the 30-minute or even lower. And in this case, I'm using the 30-minute because now we have SMT at the highs. And just like I showed you guys in the bullish example, since there was SMT at the highs, all you need now is just this high or the candle below to get closed below, since this high was never ran out. And whenever that lower time frame signature is used, and in this case I just use order blocks, so people could be using, this inversion fair value gap right here, whatever it may be, it doesn't matter, right? And again, what do we have? Displacement. We have fair value gaps being present, and this is just during the Asia session, right? You don't have to be trading this. I was not, but the point is Asia is putting in a potential high of day. How do we know that? Well, this is how we confirm that. Continuous displacement away from these areas. We manipulated the high on YM right here. And how do we know that the SMT is going to hold? Well, if the stronger asset, and in this case, YM, the one that made the higher high, is also displacing away, also creating fair value gaps, also is disrespecting bullish PD rays, now you know that the reversal is most likely confirmed. And here is the New York continuation. You can see London is doing the same thing. More confirmation that we are on sides. And now we can get towards the 9:30 opening bell. And you guys can see, right, what happens. What is price doing? Sitting inside of a bearish 30-minute fair value gap. What do we have? A series of up close candles. Gets closed below. This could be your entry right after here. Stop loss at the high. And you can see what's going on. Obviously, this is absolutely ridiculous. 221 point stop, but you could go in the lower time frame and narrow that down even more. That's what ICT always says, is every time frame is fractal, but you have to have the narrative behind it to be able to understand where your stop loss should be placed. And in this case, we understood that the reversal could be put in during Asia. It's confirmed by the displacement from both assets. More fair value gaps are being left behind. Series of up close candles getting closed below. And then what do we have? That Asia reversal to that New York continuation. You can see that equilibrium of the range was met. And look how this daily candle was formed. Very small upper wick. Very shallow run above midnight here. Large candle body supporting expansion. And the last example is on March 28th. Same thing. Always ask yourself, is price in an expansion phase? Yes. What are our targets? This would be our area of interest for the week or next week, etc. And we can go to the 4-hour time frame. And what are we looking at? Well, we have a 4-hour fair value gap. We have a pretty shallow run into the 4-hour fair value gap. So what is that telling you? Price is most likely weak. We have up close candles getting closed below here. And now we can wait for Friday. So here's Friday. And what do we have? Well, we go from the 4 hour. We know that this is our series of up close candles. We have our sell side liquidity pools below. And we can mark out 18 o'clock. That is your Asia open. Then we go to the hourly time frame because we go back to the 4 hour. There really isn't too much to look at here other than, again, another up close candle getting closed below. But the hourly is much, much cleaner. And this is that same example from the PowerPoint. What do we have? A swing high here gets ran out after displacing what? Away from these PD arrays above here, and you can see up close candles getting closed below, continuing to be used as resistance, and that's what you want to be seeing. So here's your important high, your swing high during the Asia session gets ran out, and then now you have a series of up close candle that gets closed below here, leaving what? A fair value gap, indicating what? Displacement, indicating what? An urge, a reason to be going lower into your sell side liquidity pool below here. And then what do we have? Well, potential high of day. There was no SMT at these highs. So it's just slightly less probable. But once again, I do not require SMT. How is the daily candle forming so far? Very bearish. Very small upper wick. Supporting what? Large candle body. You can see this dotted line is the midnight opening price. Very shallow run above midnight into this hourly buy side liquidity pool. Change the state of delivery. Hourly fair value gap. Now what do we have? We have our next opening time, which is that 9:30 bell. And if you would have waited for this, you can see once again another series of up close candles that's rebalancing the fair value gap. Gets closed below. You could be shorting right there. You could have your stop loss once again above here. Same thing, egregious stop loss. That's not realistic, but you can find something in the lower time frame, and you could be targeting the lows. And that is how you can expect price to continue lower. And what do we have? London 2 a.m. potentially puts in the high of the day, which we're understanding that it should be after everything we've just went over. And then you're expecting that New York continuation, and you can see what do we have? That 10 a.m. candle delivering all the way into our sell side liquidity pool below. And I believe we could find something here just for anybody. Yeah, so this is a little bit better, right? So now we're on the 15-minute, and this is clear as day, right? Even if you don't even have to wait for that hourly CSD that we were looking at earlier. You can either trade this very small inversion, or you could just trade whenever this fair value gap gets closed below here, because bullish PD rays should be acting as support, but they're not. So that's telling you something. Or you could be entering off the order block, which is indicated here right after 9:45. So now you can see if we would have entered here with a stop loss now at this high, 75 points, right? Still a lot, but better than 150, right? And if you do hold for this, which you should be holding for these liquidity pools, because you're not going to reverse from something like this after and you also have to remember, right, this was during those very volatile times, but now you can just size with 2 micros, 75 points on 2 micros, that's $300, but now you're making 3.5 R, right? And you should be expecting, this is also why I mean what you shouldn't, or you should be holding for these moves, because you're understanding that the London reversal was already put in. So that means New York should continue lower. That means whenever this low, the only relevant low that is in the vicinity besides these lows down here, should be getting ran through, because New York has not done the continuation part yet. And you can see New York continues here, hitting your sell side liquidity below. So that's how you have to kind of piece everything together, and again, have to kind of trust it. And maybe we could even find something a little easier on the 5 minute. So yeah, so same thing. Instead of now looking at this, you'd be looking at this up close candle. You could be entering off the retest here, and now stop loss would be here. So now we have a 56 point stop loss instead of a 75, and then you could be, of course, just targeting 2R or that all the way down here. And now you can see how you can kind of catch monster trades, etc. Those are my 4 examples. We can do some questions. Bev, if you have anything to say, go ahead.
I mean, I don't know if I have much more to add to that, but yeah, dude, questions are let them fly.
Did that make sense to anybody? I know it was kind of fast, but kind of wanted to keep it a little bit short. I know it's kind of hard to process something like that, especially if you're new. But please feel free to ask whatever kind of questions. We'll do it for at least 10 minutes.
So Hug a Bunny sent a question. I like the name, by the way. So me personally, and I know Rob, you have a different belief on this, but I personally don't. I mean, I believe the no news Mondays are always more or less unfavorable, but for the most part, I don't really believe in daily profiles, as in like Tuesday we should expect this, Wednesday we should expect this, etc. And then red folder days, I prefer to trade them because there's more volatility. But I don't trade them till after the red folder's been announced, and I almost only trade those to find a play towards data highs or data wicks, something like that. So just because those are very high probability. So let's say it wicks up really hard, it leaves a fat wick at the top, retraces, then you can find a move that goes back and takes that wick high or low, whatever it is. Um, and I guess it all kind of just depends on the day. Fridays are iffy, especially if it's OPEX. There's a lot of low volume or high volume, just depending on what it is going on that Friday, because Fridays do involve a lot of things like expirations and contract rollovers, things like that. So Fridays can be more low favorable, but at the same time, there can be more volatility. So it just depends. Like I personally just look at it day to day. I almost of course, I go into each session trying to, find what I should expect from the day. But just from my personal data and stuff, I haven't really found a similarity in a day of the week that's, specific. Besides those no news Mondays, those are almost always unfavorable. I don't know if that answers your question, but that's kind of how I feel. I don't know if you want to add to that, Rob.
I mean, yeah, I completely agree. No news Mondays, 8 out of 10 times they're not going to be great. But like what somebody asked earlier about the ICT profiles and what Bev said, like if you show up every day thinking that Tuesday or Wednesday is going to be the lower or the high of the week, you're just going to get slammed every time you try and put on a trade because that you're literally just using a pattern. You're not thinking about anything else. So
Mhm.
you just can't do that. But yeah, I mean, I'll never just skip a day just because I think it's not going to do anything. There has to be complete logic behind it. And have your own data too. Like somebody in our Discord doesn't do well on Fridays, and I was like, if you are consistently losing on Friday, just simply stop trading Friday. Doesn't mean you have to get better at trading Fridays. If you've been trading for however long and you just can't win on a Friday, just don't trade on a Friday. If you do good all the other 4 days, you're literally just going to be saving yourself money and mental stress. And the economic events, I will always trade. You want to be trading when there's red folder news. You necessarily, like Bev said, you don't have to. Sometimes I'll trade before it if I kind of understand. Unless it's like CPI or something, then no. But like 10 a.m. news, 9:45 news, I'll normally typically trade before then if I see my entry signature.
Yeah, there's usually a lot of good volume on red folder days before and after the event. It's just something that brings more people to the market to actually pay attention what the day is doing. Because there's billions of investors in the world, but traders, day traders themselves, they're trading every day, but days like red folders will get some of those general investors to dabble on those days. So you typically will see more volume. Yeah, exactly, exactly. The news is funny because usually what the move happens on the news, it'll go take a buy side or sell side that has been the target for a few days, maybe a week or so. Sometimes it'll just wick up in a 1 minute candle to give you like a 200 point candle and just wick it out, and there's your whole DOL move. But yeah, for sure. Any other questions, fellas?
No problem, buddy. Hope you were able to gain something. Yeah, guys, please don't feel free to ask whatever. There's no dumb questions.
Yeah, seriously, there is no dumb questions. We have all spent years doing this, and we've all asked very quote unquote dumb questions. And yeah, they're not dumb. They teach you a lot. And yeah, let's get Alex on here. Touch his mustache.
Boss Hog wants to
Boss hog
speak.
on the
Yeah, I don't know. I don't know if that's happening.
yeah, some slurs will be thrown. I don't
Yeah,
know. We
that
got
that
we
ain't
got people
happening.
in here. Oh shoot.
Great class, appreciate it. No problem. John, thanks for coming out. Hope you guys
Yeah, for
get
sure.
value from the alerts and commentary we put out.
Max, so we have here. Let me do this.
Yeah, there's a recording channel with all of the classes that TT and Alex did. I think I was in one of them. Blake, thanks for the
We
love, bro.
have.
Appreciate it.
I think that.
Appreciate you too, Max. Yeah, it's recorded, Drifty. I'm gonna upload it as soon as whenever we get out of here, which I'm assuming will be. Yeah, another 8 minutes or so for you guys to just maybe think a little bit or chuck something out there. But it's
Yeah,
recorded.
Max, that's a good place to start. And then there is a ton on YouTube as well. Dude, I can't remember. Rob, do you know there's a guy that's like Mr. Trader or something on YouTube that simplified ICT? Do you know who I'm talking about? Do you know what I'm talking about? Like he took all the ICT rants because they're all hours and hours long and simplified them to
Somebody
what you really
paste
need to
that.
know.
Somebody posted that one day, but I've never watched them.
Dude, I've gone through those a few times and I never save it, and I need to save it because I always forget what that dude's name is. But he really simplified the videos of ICT because I get it, dude. Watching 30, 40 hours of 80% of it being rambling can get draining, hard to pay attention to and learn from it. But
Yo,
yeah, those videos are awesome.
Blake, I have a bunch of classes that I've done, just kind of going over trades or other stuff that we've done on my YouTube channel too. That's where we've done a lot of recordings on there as well. But the main meat and potatoes is in the recordings and PDF thing that Boss Hog sent you.
Oh, like to see what today's probability is like, Drifty.
Can we do a live probability day, or is it still too early in the age session?
Uh, Probably still a little too early. Let's just see what daily profile looks.
Yeah, I mean, I pretty much
Daily
never
activity
trade
looks.
Asia Drifty.
I mean, on NQ1 we took all-time highs, but that's not right, right? We're NQU right now.
Yeah, just
Oh yeah, we haven't.
put on BA whatever. But yeah, nah,
Yeah. Oh yeah, huh, I've always forget.
it's close though.
Yeah, I honestly wouldn't be surprised if somehow, some way we get a dumb wake in Asia that just takes it and sets
Yeah,
us up for a weird week.
I
But
won't be trading
yeah,
tomorrow. It's no news Monday,
yeah.
and
My
it's
plan is just to
NFP
let the
week.
swings run and maybe possibly look for something around London. Maybe,
Yeah,
possibly. But I'm only gonna look if we sweep these lows of Friday. It's the only thing I'll look for. Right now we're in a spot where you don't want to touch it. It's already swept yesterday or Friday's highs, and yeah, like I said earlier, yeah, don't look at it right now.
anybody else have anything? How much attention do option
How much?
traders need to pay to the NQ and ES
Oh,
chart?
100% if you're trading SPY and QQQ, trade 100% off. Don't trade it off the QQQ and SPY chart. Trade it off NQ and ES. I promise you, it upgrades a lot of things for you. There's so
Yeah,
much data that's given overnight that doesn't get translated to SPY and QQQ's chart. Like there's so many gaps if you go look at dailies and 4 hours on SPY and QQQ that makes so much more sense when you see what actually happened by looking at NQ and ES. I don't use any indicators, to be completely honest. I don't use a single indicator. I use the ICT kill zones sometimes, but that's the only indicator I use. I just don't.
Yeah, I don't use any indicators either. Arc, besides the ones that like I'm just a little lazy now with the midnight price and monthly open and weekly open or whatever. And I use this daily candle to show me how it's printing just because it's just nice to have, but that doesn't it's not like an actual indicator other than price. SPY follows ES and QQQ follows NQ. Yeah.
It's the same index. But the one thing about SPX is it doesn't track any overnight activity. So if you look at SPX and NDX compared to SPY and QQQ, you'll see that it basically is like a ladder. So NQ has all the data, QQQ has a good majority of the data, and NDX has like basically bare minimum data, just New York hours. So you always want to correlate all of them. I always just any options you're going to take on SPX or SPY, just look at ES. It will save you a ton of because a lot of times, especially this year, I've noticed Asia and overnight sessions have made those liquidity sweeps that if you're only looking at SPY and QQQ charts, you won't know they were already swept. But if you look at, ES or NQ, you'll see overnight they did. So it's very important to track everything off ES and NQ.
Anybody else? A few more minutes. I know a few of you guys are typing. Get those out and wrap it up. I mean, I hope you guys got something out of it. A little something, something. Yeah, of course, Max. Thanks for coming, bro.
Of course. For sure. For sure, guys. Anytime we want to start making it relatively regular,
Yeah,
doing
for sure.
classes and stuff. So maybe what we do is we set kind of a channel up that is, questions that, people struggle with or whatever it is. And we'll make a class when we find one that majority of people are struggling with. We do need a Swami class. We're talking a little bit about entry models class, but I can see how it'd get confusing because we all kind of have different entry models. But we're trying to figure something out there to help you guys a little bit.
Yep.
Yeah. Just ask Swami. I don't know.
Alright, guys. Have a great rest of your night. I'm gonna
Yep.
record or
Deuces,
get
family.
the recording up, but see you guys. Have a great rest of your weekend, and talk to you guys this week. Deuces, guys.
Much love. See y'all soon.